When it comes to trading, there is something that is common to all traders and something that is common to all trading charts that you come across. And that particular thing is what I'm about to share with you in this video, and how best you can take advantage of that when it comes to your trade analysis and trade execution. This particular common denominator to every trade, either your strategy or pattern of trading, is very much important for you to know as a beginner. And this particular thing that is common to every trader is time frame. As you can see on my screen, you can see that we have several time frames ranging from the weekly time frame. Several of this time frame is applicable to all the traders. So you can see this time frame here from the 1 minute. All of these are similar and common to every trader. So as you can see, we have the 1 minute, we have the 5 minute, we have the 15 minute, 30, 1 hour, 4 hour, daily, weekly, and monthly. So this particular time frame is common to all traders. So the question now is, how can we take advantage of this time frame as a trader? And what is the best recommended time frame? If you are following me, I have a recommendation for you. All you need is, as a scalper, is a 1 hour time frame and a 15-minute entry or 5-minute entry. You don't go below 5 minutes when it comes to entry. And when it comes to your analysis, your major focus on your analysis is 1 hour and 4 hours. This is how exactly this strategy is built on, and I'll be showing you exactly how you can take advantage of that. Looking at my chart, price, let's look at the current price scenario on our GBP USD. This is a 1 hour chart, and this is our middle Bollinger Band, and presently price is above the middle Bollinger Band. So we are saying that we are pushing up, and this is our uptrend. However, if we go by analyzing the structure, you will still agree with me that we are still in an uptrend. We are having this lower high, higher low, higher high, higher low. But now price failed to create a new higher high, and now we have a new lower low. So obviously we are having a change of trend direction, which is now our lower high, our lower low, our lower high, and then we are having a new lower low here. So what are we saying in essence? Price is still above overall. Following our indicator, price is yet to confirm as a downtrend. But however, the advantage of the naked chart is that the naked chart will give you early entry when you do your analysis without indicator. That doesn't mean it is superior to the indicator analysis. What that simply does is that it gives you advantage of early entry, while the indicator will save you from manipulation, because for price to cross the middle Bollinger Band, automatically price has moved in a reasonable direction and have established the trend. So this will save you from manipulation, while early entry, you can be a victim of manipulation. Having said that, let's go with what we are having now, that we are in a downtrend, because we are having our lower high, our lower low, our lower high, and now our lower low. Now that we have established this on a 1 hour time frame, what do? We'll mark our point of interest. First, we have this particular order block as our point of interest. So if you follow this order block has been mitigated, because we have that order block and then we have this fair value gap. As you can see, there is a fair value gap on this candle here. So what price does? Price went back to fill into that fair value gap, and then we see it plays out. So let's look at how this entry came about. So we have done the analysis on our 1 hour time frame. So what is next? We will now move to our lower time frame where we'll be making our entry, which is going to be our 15-minute time frame. So perfectly, we are in our 15-minute time frame. Alright, so look at what happened here. On this 15-minute time frame, price gave us the same pattern. So, and here is the pattern. Look at what happened now. Price pulled back and then fill in that zone. And when it fill into that zone, look at additional confirmation. We have this divergence here and here, and then you can see that you sell from there. And if you have taken that sell trade, you can see how price plays out all the way to this zone. So you can see how effective this is. Now let's go back. This is our 1 hour, and you can see how we make our entry on 15 minutes. The advantage of the 15-minute entry is one, it will give you a lesser stop loss. This is where our stop loss would have been. Let me put a horizontal line. Our stop loss would have been here. Then our trade entry is here. This is our trade entry. So that is our entry. I would have used this engulfing candle as our entry. So this, let me change this color of this indicator. Our trade entry, I'm changing the color to blue. So let me change that to blue. Okay, so the blue is our entry and this is our stop loss on the 15-minute time frame. Let's come to 5 minutes and see where lies our entry. So we are moving down to our 5 minutes. So here you can see our entry on the 5-minute time frame. So here is our 5-minute entry. So look at where our entry would have been. On the 5 minutes, this is our stop loss. Sorry, on the 5 minutes, we will be maintaining the same stop loss above that high, right? But look at where our entry would have been. Our entry on the 5 minutes would have been this bearish candle. So this bearish engulfing candle would have been our entry on 5 minutes. So you can see this particular bearish engulfing candle. So would have been our sell entry would have been here, right? And then look at our stop loss. So you see that the lower the time frame, the smaller the stop loss, and then the higher the profit. I would have been into this trade early than 15-minute time frame. So if I'm to make this entry on the 1 hour time frame, let's see where my entry would have been. You now see that on the 1 hour time frame, my entry would have been here. So you can see that 15 minutes gave us earlier entry than 5 minutes than 1 hour, while 5 minutes gave us early entry than 15 minutes. And the way we are having this entry, we are having a smaller stop loss. So the lower the time frame, the earlier your entry, the smaller your stop loss. Okay, and when it comes to analysis, you always look at 1 hour first or 4 hour first. Very much important in order for you to establish the trend of the market. Then you narrow down to your 5 minutes or your 15 minutes where you can make your entry. So this is very much easier to do, highly profitable, and it will save you from a whole lot of loss as far as trading is concerned. So here is our 5 minute entry. Here we have make our entry on a 5 minute, and our entry would have been here. To here is our 5 minute entry. So you can see this is 5 minute entry, right? And this is 15-minute entry. So it is smaller compared to that of the 50 minutes, and it is fast. You would have been in profit earlier than that. So I believe you have understand. All you need is just these two time frames, either your 4 hour, 1 hour, 50 minute and 5 minute entry. And as you do this, I believe it will change your trading to the next level. Thank you so much for watching, and we look forward to see you in our subsequent video. If you are here to subscribe to the channel, please do well to hit on the subscribe button, and do not forget to give this video a like, share and comment. More also have a special edition coming up, and this edition is based on our forthcoming mentorship training course, the last for the year. If you are interested, there'll be a description in this video. Thank you, and see you in the subsequent video.